Hi everyone, good afternoon, and I say very big welcome to every one of us. Welcome to session three. Yes, that's what we'll be doing today. I trust we've been good and we've been well. I know it's quite a busy period for everyone, close to the end of the year. So I'm on desk. Everyone is busy. I'm also busy over here. In fact, I ought to be working currently. Well, let's still try and make time for ourselves so that we can make progress and also continue from where we stopped in our previous session. So just to have a quick recap, we got started with our model build templates in our first session where we were able to set up our model structurally and based on how we want it to be structured, because that's always the first thing that you need to do uh, when you're trying to make sure you are building a flexible and model that can be updated going forward. Then in our second session, we're able to get information, historical data from our clients. So as I said, most times you might need to go very, very granular, like the lowest granularity when it comes to you building a typical operational model, right? Short-term cash flow. I also promised us that I'm going to invite some of my guys to also come and share their experience, those that specialize in uh, short-term cash flow, working capital type of model where they even build model on weekly basis. Yes, lowest granularity. They connect to your bank statement. From the bank statement, extract the data. So it's a whole lot. But for the purpose of our own learning, right, we're just keeping it to this level of granularity. The whole thing is for you to understand the whole concept. But most times you need extensive data analysis skill. Yes. In fact, Power Query, you need it because most times you need to just tell the client, oh, you know what? So some of them usually have a robust data if you are dealing with uh, companies that's been in operation for quite some times and they have well detailed financials. So most times all you need to do, they need to put their data and maybe the data is just way too big that you cannot load it, you cannot just bring it straight into your model. So what we do is they ask them to create a folder on their Teams or some share file folders like that, and they can dump the documents. Right, the Power Query will go and open the documents on monthly basis. They keep putting those figures there. You come to your model, the Power Query connect to it, load the data, and feed into different segments of the model. So the whole learning curve, right? But a step at a time. Once you understand the whole logic holistically, the other part is how do you manage data such that your model is still very, very efficient because that's more the objective should not be forgotten, right? You must be user friendly. And also, I won't lie to you, we don't typically build a working operational kind of model for someone that does not have a knowledge of it. So yes, that's just the truth. Because you don't want to be teaching someone this is A, this is B. So most times we deal with CFOs, right? We deal with people that are very, very knowledgeable. So not someone that will be asking you why is this 5%, why this. So it's their data, you work with them most times. So yeah, that's the history. Then we set up our inputs to accommodate both actual and here we have our forecast. So which means every point in time, they always need to come back and update this. So that's why I said this is not for I'm a CEO, but I don't have a financial knowledge. You know, we deals with guys that yes, managers, CFO that really understand this as well. Most times you tend to tend to keep you in the engagement so that you can always help them to make the updates. Or you're done with the model, you hand it over to them, give them a guidance as to how to manage the document, right? And they can always do that on their home. Because I know one of the problem we face as a modeler is you build a well robust model, then it gets to the users and the users are like, it's very hard for us to understand what is going on or to update. So no, so most times we deal with people that are very, very knowledgeable. Okay, yeah. So we set up our revenue. I think that was what we did in the previous session. We also set up our in our calculation worksheets, right? Which I said most times it's always good you have your monthly financial statements on monthly basis in our calculations. Just have that up your income statement, balance sheet, cash flow. If you want to add any analysis on monthly basis, we can include that below. And below that, we have our calculations. So, as I stated, that most times we build this for for companies that have multiple subsidiaries. So they have like 5 different subsidiaries that you need to consolidate. So having it this approach, right, where you have that 3 financial statements above each calculation. So you don't need to start doing calculation for each of them, then separating the output. So you also try to manage your worksheets to improve the efficiency of your Excel workbook, right? So you open some people's Excel workbook and you have to keep going to the end, going to the end. Yeah, most times, as I've also built a model where there are almost 100 worksheets created, right? So because different subsidiaries, data load and all. So it's part of it. All right, and we got to our revenue, which we completed in our previous session. And as I said, at every point, you always make sure that your balance sheet is balanced. So if it does not balance, then that is the sooner you know and you can check what is happening as compared to you finish building the whole thing, then at the end you realize it's not balanced, then you start looking for where it starts coming from. So each line item, you finish the calculation, you link that into your financial statement, and it's easy for you. Also, for uh, updates with the clients, right? You want to, because when you are building this, as I said, you build this along with the clients, right? They have a contact person that you can, okay, so this is what we are doing for this line item. So there's also a document that states this is how we plan to do this. So each line item will be clearly stated that, oh, this is how we plan to model this line item. This is how we plan to model this line item, this component. So you send it to them, they agree. Not like a typical model where you don't build in the model, you send it to the client. That's when the client will now be like, oh no, this is not correct. This is not no. So it's not like that when you are building this kind of operational model, because it's more like a management tool. So as you are each line item must be clearly stated that, oh, this is revenue, right? This is how you make your revenue. So for revenue stream 1, this is how we are going to model it. This is the information you've provided historically. So they sign off on each line item, right? Not as if that you are done with the model bit, now starts asking, where did you get this information from? Why are we doing it like this? Why are you doing it like so? Most times you are building it alongside with them. Oh, this is how this line item has been calculated. This is how we are going to calculate this line item. So it's clearly stated, right? Because it's a whole lot of work. So you don't want to finish building the model, send it to clients, and that's why, because most times you can a typical model, that's what you see happening. You ask them for information, they can't give you the information. They see the model output, then that's where the issue will now start from. They now be questioning you like, where did you get the information from? Where did you get the data from? In operational model, right, you are working with the management, you are keeping them updated. This is where we are, this is where we are. In fact, where there's an option for you to even share the model, the draft as you are building it, or maybe you are presenting. Once you've set up this financial statement, it kind of gives a good progress view that, oh, okay, yeah, so what we've done last week was to work on the revenue, right, which we've agreed. So we can see the input. This is what we've set up. We can share draft with you for you to try and play with those inputs, the growth, and if this match what you have uh, budgeted, right? So as you are doing it, you are working with your client. So most times it's always good you preset these 3 financial statements and to kind of give like, yes, work is actually going on, right? And there's like a percent completion. So most time that's how you also charge the clients and things like that. So we finished up our revenue, and today let's go straight into the next line item, which is our what? Which is our direct cost. So most times when you're also building the model, it's always good you do it sequentially with the way we have it in our financial statement. So you have your revenue, right? You go to your direct cost. So anytime they are looking at it, it's easy for them to look at the financial statement from top to the end, right? Each of the line items. So now let's go straight to our direct cost. So before we get started, do we have any question, any clarification from what we did previous sessions? before we go ahead, so if you like, you can type in the chat box, and if you prefer to just unmute your mic. And please, I would like us to keep it short. We have like 1 hour 30 minutes to complete what we need to do today. Any question, clarification, addition? Yes, maybe you also have an experience building something like this, and you also like to share with us. We also appreciate that. As I said, this is knowledge sharing. This is like a mentorship, not like a training thing, right? Watch me build, look at it, ask a question, your contribution to anyone with the experience of something related to what I've mentioned. So if you feel like, oh, let me share my own experience, right? Because that's the best way we learn, you know. All right, so let's go straight to our direct costs. It was part of the assignments we were given previous session, but let's just go ahead and let's also build that together. So we have our call ups, basically our timing and flags. So maybe so most times always, so also part of building a model, which we ought to have been doing, is putting an explanatory note. This is really very good when you are building models, right? So I'm going to give us an example, but it's always good you keep this as part of your best practice, so that not so they don't have to be looking for you every time they open the model. What's happening here? What's happening here? So for example, we'll call this I can call this uh these these are linked up linked timing and flag data, right? So these are linked timing and flag data. Then you can put further explanation, right? These flags are used to control the flexibility of actual and forecast data. So it's always good you kind of do something like this when you are building the model, right? This also gives the users an ability to be able to understand what you've done in the model. So for example, here where we had to convert, so I can even do another example for the macro data, right? So annual inflation input data linked from input input, right? That's one. Then second here we can then say annual inflation uh, computed into monthly percent driver, or just something like that. So it's always good you create something like this, then you say monthly inflation percent, yeah, right, calculated into inflation index, or multiple, right? Then you can state, so the price, the costs the cost inflation factor drives the drive drives any line item related to expenses, and price inflation, so inflation factor drives any line item related to income. So just keep it simple like this. Things like this are always very good when you are building your model. So for example, in this my case, I can just decide to put three of them together up here. So right, you can put three of them up here, and this just kind of give uh, at least basic explanation to what is going on in that section, right? So most times when you are building a model, it's always good we kind of include it like this. Yes, I know, as much as we modeler try to build model and we make sure that while we are keeping it simple, we are the one that still understand mostly what is going on. But when you are building this kind of model, which you need to hand over to the client, and you don't want them to be calling you every time, getting back to you, it's always good when we include things like this. So, for example, this is revenue summary. Just put a note and just kind of give that clear description. So, please, it's always good. You also keep that as part of your model practice. And most time when you are building it, is all you just do it immediately. Yeah, at times I just want to try and finish up the model, then you might have forgotten some of the things. So most times it's always good you just do it as you are building. So now let's go straight to our direct cost. So direct cost, right? I'll come in here in my inputs. I'll just also copy this, my header 123 sample that I've created, then insert it here. Then I call this direct cost. Right, so direct costs. I think we have, so if you look through the historical, we also have a breakdown of our direct costs. How many do we have? So we have 4 line items, 1, 2, 3, 4. So let me copy this. Should we do it like that? Or should we just make it 1 line item yeah, I think let's have it here. So the first line item is our server description and subscriptions, right? Okay. So now let's see the way so we need to keep the same structure with what we've been doing. So first we call the actual, right? We call the users. Okay, yeah. So first let's call the actual server hosting, and so I want to work smart. So let me use formula. So actual, then hand. Just join it with the header title. So I can always reuse that for other line item. Okay. So what's the currency? So here, I think our model is in thousand, right? Okay. Yes. Good. So because we always need to keep that in mind. So this should be current model currency. So did we use formula here? Okay, no. So let's just call that in directly. We've called that in. Then let's call this. So let's just call this forecast growth. Forecast growth rate. This should be percent. I can copy one created here. So please, in case you have any question, please just type in the chat box. Checking that already. So for this cost of sales, right, we're going to make a provision for a percent growth. Okay. So let me see what we should do here. So let me just keep this for at least for now as 0. Then I can call this my actual. So let's call this actual and forecast. So basically what we want them to be able to see here is to be able to see. So this is let me see. Okay. So these are in actual value. So we need to divide it by, so we need to divide this by 1,000. So divided by 1,000. So maybe, so because the value is small, I can put that in 2 decimal points. And here, let me do, I think we've created a formula. We can, okay, yeah, so we can always replicate this. Also, let's look at what the growth of the historical had been. So that's always kind of good to give us what that would look like. Then the formula that we've created. So consistency, that will also allow us to move very fast. So between year 1 and year 2, increase of 3.1. Right. So so we are still going to apply inflation factor. So remember that. So my next January, so maybe put this as, let's go with 2% for now. The next January, 2%. 2%. So most times, because of doing all this manual update, which they really have to do, they really have no other option. And one other thing we also try to do, because there are some clients that, yes, they want to take ownership. They don't have a junior staff really that can be updating it manually like this. So most time, the other thing we do is we create some of these assumption on annual basis. So we just ask them to input the annual. Then in our input, we use like index match. We look up to just call up those data to flow straight into the monthly. The start of every financial year that they are using. Okay, so that's one. So I'm going to work very, very smart. I'm going to copy this guy. So paste it below. Then what's the name? What's the title of the second line item? So please, if you have any question, you can just click on your hand tool, raise your hand, and I will. If you prefer to speak, or just type in the chat box, then divided by 1,000. So this is benefit of using the same structure. But while you're using the same structure, it's always good to also check, because it's garbage in, garbage out. You did put in a mistake, you get the result of that same mistake. I'm not sure that word is even a good a good example. Garbage in, garbage out. But I'm sure you understand what I'm saying. So processing fee, so divided by 1,000. So for example, things like this, processing fee, other costs, you can always ask the client, okay, what do you think? This line item, are they like percent driven, or you prefer to keep it the value as we have it? So things like that, they are saying, oh, our processing fee is like 1%. Because now let's look at historically. So this is in January. You can see what that looks like. Okay. If I come to the next period, January, the value also kind of goes up differently from what we had previously, right? So it seems January has like a seasonality, and I'm sure we can understand where that is coming from, right? So because the annual revenue, which people renew yearly, right, in every January, it seems to be driving things like cost like this. So you can also see the other costs. So things like this, you look out for it. So which means we cannot use it the way we have it currently. So what we are going to do is we call this percent of our revenue. Is it revenue? So it's all okay. Yes, revenue. So if you are using revenue, you just keep the same name conversion. If you are using sales, it's always good you keep that, right? So percent of revenue. So which means we need to change this. Okay. So I'm going to call this divided by what is our revenue. So let's just go straight into the historical and pick the revenue directly from there. So divided by total revenue. So remember, this total revenue is in, okay, yeah, so they will be both in the same unit. So processing fee divided by my total revenue, enter, and that will give us a sense of what historically what that percent to revenue looks like. So you can see how we also manage client data and all, right? Because that case, for this case of processing fee, it actually does not make sense for us to be using for us to be using that percent growth from previous period increased by certain percent. So with this kind of give us like, oh, it's just 1% of the revenue that you have in that period. Okay. So that was can also keep that same trend. So the next one is other costs, which is also as what percent of revenue. So if we also check this, so other cost divided by our total revenue. Okay, not sure that I'm doing that correctly. Okay, yeah. So let me just first call the value, the actual right, divided by 1,000. Then the one below is the percent. This divided by my total revenue, and that just kind of give us what the percent looks like, and we can apply that percent. So 0.5, like that. Okay, so any question? Any question regarding this? Any question? Is it making sense? Do you agree with the approach? If you disagree, please just let us know. Okay, yeah, so just call this direct cost summary. Direct cost summary. So let's keep the same structure. So how have we been doing the structure up here? So one, we call up our actual, but before we do that, what's the name of the first line item? That's our subscription hosting. Okay, so we have our actual call up, right? Actual call ups. So let me, to be sure, the way we've called up our actual, let's check here what is going on here. Yeah, I'm just trying to remember how we did the calculation of the other line item. So we are sure. Okay, so we are calling them directly from the inputs. That's the way we've set it up. Sorry guys, most times when you are working on multiple projects, right? So let's see what we've done here. If our period time, right? If this is equal to actual, okay, yeah. So we're just calling up the line item. So let me see what's the line item. Our inputs in our historical data. So we're calling that directly. That's row 87. So row 87. Just change the row number in my index formula. Right. So let me be sure. That's 150. Yes. So I need to divide it by 1,000. So divided by 1,000. So because the figures are quite small, let's make it to a decimal. Okay, yes. So let's make sure we keep the same structure. So we have our call ups, then we have our forecasts. So let me just call this, let me also keep that. Let me borrow this formula that we use so that we can have it as actual server costs. Okay, then the forecasts. Copy the same formula, then this time make this forecast. Okay, then for the forecasts, I'll just call that up from my input, which we have here already. But this time, I can just multiply this by our forecast flag. So we only need the one done in the forecast period. So forecast flag, keep the row constant. So I'll be able to reuse. So we can be able to reuse the formula, right? Okay. So for the cost itself, just so that will be equal to my actual, then multiply by my forecasts, multiply by my inflation factor, which is our cost inflation factor. So I can keep the row constant as well, so that I'll be able to reuse the formula. Okay, so what is going on? So, okay, so this should be plus, not multiply. So actual plus the forecast, then we factor in our cost inflationary effect on that. So simple as that. So now let's also, in fact, at times if you feel the space are too much, you can decide to remove them, especially from this third header. But most times I intentionally leave them empty like that, so that if you want to put those notes and description, you can always put it below it. So let's skip to that. Let's skip to that. So we've done for the first one. Copy the structure. For the second one, what's the name of the second one? Platform upgrade. Okay, so call up the actual. So just look for the index. That should be row 88. So change my index row number 88. Call this 88. So to be sure the value match, we also need to check that. Okay, yes. So we are on the same page. Then this input for the forecast which we have in the input, just call that up. Right, and we have this multiplied by the inflationary factor. But what's happening here? It looks like the values seems to be the same with the one above. Let's check. Okay, we're sure this is okay. So the input, I shall link that to the right input. Yes, which is this. So you can see, so most time when you are building your model, self-review is very important. So I link the server and hosting to the wrong line item. So let me exactly. So things like this, error of linking. Yeah, do we have like this another dynamic way of doing this, but where you just select the range and you create like a unique ID so as to avoid all this error of linking to the wrong line item. But most times you always need to be very careful when you're also using that, because you're actually using like a range for your formula. But yeah, now for actual processing fee, let's call that up here, which is row 89. So I'll go to my index formula and change the row number to 89. So also need to be sure if does that match. Okay, yes. Then our forecast, which is percent of our what? So percent of revenue. So I'll just link that straight to my, yeah, I think let me still keep that forecast flag. So equal to, go to my input, the percent of my revenue, convert this into percent, then drag that across to my processing fee. This time will now be different, and that will be equal to my percent. So that will be, so yeah, this, so the historical values, right, plus my percent, my forecast percent multiplied by my revenue. So go to my revenue summary here. So just keep that row constant because I'm going to use it for the next line item calculation. Drag that across, then we have our operating cost. So now also to keep in mind, when we created our model, right, we've already stated our convention, the positive value and negative value, right? So you can put some notes like income, things like that, then negative to expenses. So let's keep that approach since that's what we'll be doing. So across all our line items. So for example, this is forecast. So just put a negative sign so that they are all giving, they are all in negative. You can keep that convention since we've created that already to do for the same thing. So anything cost, we put them in that bracket in our calculation. So So most times too, because of flexibility, some might be like, oh, put everything in positive value. So what you can do is we can create like a sign called negative. So we create like an input, call it negative sign, right? Then you use that. So instead of typing the negative the way we are typing is, you just uh, kind of do that. Okay. So you just kind of change that from negative to minus since you've multiplied by all these cells. But we believe this is how we want to keep it. So let's leave it like that. The should be negative. Okay, yeah, exactly. So this is fine. Then the last one, which is our other cost. I've created input for the other costs. Okay, yeah, so for the calculations, there'll be other costs. Okay, then let me check the row. That's row 90. I'm going to change that in my index formula to row 90. Row 90. Oh, what am I doing wrong? Change 96 to 90. Okay, so then going to relink my percent to my other cost. Then this is multiplied by my total revenue. So simple. So for our summary, right, equal to, just link that straight here. Processing fee and other costs. Okay. Then total direct costs. Okay, so since I've linked this, I can just copy and paste them here. So keep the two decimal. And here we have it. So did we create like a total for revenue? All right. Remove this extra row. Go back here and I can link my direct costs. Can link it to our total direct costs, which I'm yet to do. So do the summation. Okay, and we have that here directly. Okay. All right, we are making progress. We are making progress. So please, any question, any question regarding what we just did? Any question, any clarification? Any question, any addition? I should put it that way. Any comments? Are we good? Are we good? Do we have any question before we go into the operating expenses? All right. So next, let's go straight into our operating expenses. So we've done the direct cost, we've done our revenue. So the next thing is our monthly operating costs. So we have, let me see our financials. So we have both. So we have personnel expenses, then we have general and admin, selling and general expense. So let's get straight into the salary expenses. So I'll come into my input. I'm going to just duplicate this guy, put it here. So I'm going to call this my operating expenses. So the first one we want to attend to is our personnel expenses. Okay. All right. So I'm going to call this my actual personnel expenses. And I'm going to call that up from here. Should we call? I think it's better we type that out here. Okay. Put that out here. So these are all in. So let me also use so equal to. Let me call up the actual. The actual divided by 1,000. So we have this. Now I'll just try and see how we can maintain this. So these are the actual. Okay. Then what we are going to have below, let's call this our. So let's call it personnel expenses. Personnel expenses growth. Okay. So link everything here. Then this becomes percent. This becomes the percent. So we can also decide to calculate the percent. Let me copy this guy, put here. So that will be equal to current period minus previous period minus 1. Okay. Then because we are using this cell, there's a formula here, so it's always good we keep this so that someone is aware. That's what we have now. So because there's no previous period, you can use if error. And since I also mentioned that most times we don't like using if errors because it can really override some errors which we really want to see. So most time we use if, then I'll say because this is what I'm dividing, which is causing the error. If previous period is equal to 0, then 0. If not, then current period divided by previous period. Then I only expect this for the actual period. Right. So most times as you are not getting the actual data, you always need to come back and make sure you update things like this. So what's the growth? It seems the salary has been flat over the period. No, there's a growth. Why is it not reflecting? Oh, okay. So you can see, always check. Self-review is always very, very important. Uh, you must also know what you expect to see as an input, as your output as well. So put that in here. Right. So seems previous year 3.1. So from the next period, just keep that as 2%. I think we use 1. Let me copy this guy. So as I said, all this data, yes, you always need to confirm them with the client. So in fact, most times just let's remove the one with 0 so that it's clearer where we have data. Right. So it's clearer where we have input. You can understand what is going on there. So in case they want to impute any percent growth for any of them, it's easy for them to do that. Okay, so I think this is better. This is cleaner. Yeah. So let me just copy this. I think those ones we use input for. We need to go back and just remove the ones with 0 so that it's a bit cleaner. Okay, yes. So they can see the cell where there's data, where there's no data. And here we just put equal to my previous period multiplied by 1 plus my growth rate. So as I said, for the input worksheet, yes, you don't expect your input worksheet to have that left to right consistency. So it's always good you keep that in mind. So by the time you want to start doing the update, so even if the period shifts, because this formula is here, all I need to do is to just drag this to where my actual ends. Though there's a way, there's also another way where we kind of automate this, but I just want you to understand the basic. That's more like at least you being able to build flexibility into the model, so they don't have to. So any input they put will always represent the first start of your forecast period going forward. But let's keep it the way we have it like this. Okay, so I think one other thing I can do is to just make this my link cells. So they are colored and these are data. I think we forgot to even do the same thing for here. So if you build a cell style, we need to keep to it in our now model get. So you see, which is not a good thing from us. Those data that were called up from the input, we didn't color them. Not a good practice when we've built the model cell style guide. Okay, so that's for our personnel expenses. So come to my calculations. I think that one is straightforward, right? So this direct cost, then I'm going to call this my personnel costs. So I can call up the line item directly here. Okay. Then, at times at the end of the period, they might want to do like some staff benefit cost and all those things. So let's call this other staff uh, benefits and costs. So we're just going to put this as an input. So for the actual, we block that out, block it out. Then for the forecast, we just include just that provision for that input. So maybe there's like an huge expenses related to personnel and they want to do that, they can always include that in any of the period. And that should flow in here. So let me also cut that up. So our model currency. That like this. Okay. So because we have that in the input, so let me see. So let's see that might okay. So let's keep to what we've been doing. So firstly, we call up the data from the input. So they're all linked. Okay. So let me call this call-ups. So call-ups from input first. Then below we can have our actual. So here we can have our actual personnel costs, right? Put this up like this. Drag it down. It's quite a lot of work. I won't lie to you. In fact, there are cases where you need to deal with a lot of data sets. Yes, and you need to model everything to the lowest granularity. It can be quite interesting. So, if I think we already have that form. Let me see if you can steal the formulas. Okay, yeah. So basically, let's keep to this guy. So which will be our historical plus. Okay, no. So let's see. I think we use that function somewhere, but we can always write it. So equal to if. So if my flag, if this is my actual flag, right, which I'm going to keep the row constant. If this is actual flag, comma, it should give me the value that we have here. If not, you should give me the value, right? Then we multiply that value by our cost inflation for the forecast data, which I'm also going to log the row. That's what that is doing. So basically we're saying if my flag is actual, it should give us the actual call up. If not, it should give us this call up multiply, which we expect to be for the forecast period, multiplied by the inflation factor. So copy that down. We can have our total personnel costs. So sum the whole thing, then add this. Uh, most times, if a range is empty, it's not always good you add it. So don't highlight it from top to down. People can, while trying to work with the model, they can mistakenly type something there and that might flow into the model. So remember, I've forgotten our best practice. So you put everything, this cost, put that in negative, allow the client to impute the value in actual. Okay, so which means we have our personnel costs. That's quite straightforward. The personnel cost, and we have this. All right. So using that same approach, it should be easy for us to work with our monthly operating expenses. So that's why structuring is very, very important. Keeping the same structure when you are building your model will really help you work faster. So what did we call that? So this should be selling and general. Let me just copy this guy. I'm lazy to type. So yes, so actual SG and here selling general admin expenses. Okay, let's just write it in full. Selling and general expenses equal to sorry, let me just copy that from the input. Copy it here. Okay. Sorry, most time the laziest modeler get things done faster. So equal to it's my monthly expenses, so divide by 1,000. Then copy this down. Okay, no, so that's too much. So that should just be only for the actual period. Drag it up to the actual period. So something like this, right? So if, for example, if a business is trying to, let's say they want to get a funding or they are trying to do some restructuring and maybe the financial close period is next year, what usually happens is because this kind of engagement usually take a long period of time. So a separate company will be building the model. There will be another separate company that's doing the advisory. That is, when you are done building the model, you send the model to those other guys. Those guys will use that model. They will criticize it, use it to create the investment memo, and they'll be the one to deal with the financing and the whole transaction thing. So what usually happens is they give like a 3 or 4 months gap before the transaction period. So which means by the time if the transaction will happen in January, you would likely start the engagement around August or September. Now, so which means you need to build a model and they will look at the financial up to December, right? So which means you need to be able to build that flexibility such that immediately September, August, November, December data, actual data available. All they need to do is dump it into the model and you just do your normal updates and you have everything ready immediately. So that's more like typical way of doing it. So you always make sure that that flexibility is there so that when the actual data comes in, you don't need to start going back and be doing everything from scratch again. Okay, so now for our input, let's also create additional, let's say any other selling and general expenses. So there could be some kind of one-off expenses. right? We just also create that input just like we created for the salary personnel expenses. So they can always include that, right? So that's the actual. Then let's have the growth. So selling general expenses growth. Okay, so copy this guy. And this will be in percent. So I'm just going to copy the formula I've created up here. Put that. Let me see. I can put that in here. Right. So that's for the actual. Let's see the growth. So let me link the formula to the correct line item. $5.7. So if I copy the formula down, let's see what we get. So the cost increased by 5.7. Let me copy this format that I've created up here. So 5.7 within a year. So let's keep this to just put this as 3.5 for now. We can always come back and update this. So as I said, most times you run this data, this assumption for the client and be sure it's making sense. Okay, so just copy my formula up here, paste it down, link it to the correct line item, copy this down. So please, as I said, if you have any question, and the recording will definitely be made available. So you in good hand. Now let's go straight to the calculation set. Most time the laziest would like get this done faster. So I'll copy this whole range, I'll paste it below, call this my selling and general expenses. Okay, so the call up, so equal to, go to my input, call up my input. Okay, so we have this, so call that data from my input. So then that should flow down here automatically. So let me be sure. So if here this, if not this, multiply by the inflation factor, copy that down. Sure everything is working. I can do my summation. Here we have our operating expenses. We have our operating expenses. Okay. 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 So we have our operating expenses, and now let's check. Let's try to do some checks in. Do we have EBITDA in their historical financial statement? So things we can always do, we can always create checks. Remember, checks are very, very important and they are very, very good. Have we created any? Okay, yes. So we created historical revenue checks. So let's also create that same thing for our direct cost. So to be sure that yes, at least for the historical data, because that's the worst thing you ever want to happen. Your historical data not matching, not matching client data. No, you don't want that. So for our direct cost, let me recreate the checks. I've copied that, the one we created for revenue. So let me update that from my historical. What's our total? Let me see, where did we pick the one from revenue? Let me check. So pick this from, okay, yeah, from the main financial output. So historically, so that should be my row 10. So update my index formula, row 10, then I need to put this in negative now so that I can check. So yes. So why is it even matching? Was this supposed to throw error with this minus this? So yes, so what's the minus this? 0.9. Then what's our tolerance level? Yeah, well, yeah, let's just update to be sure. Yep. So if I put this in 2 decimal, it will be sure that yes, our historical data match with what we have in our own completed outputs. Okay. So let me change the revenue. So historical direct costs does not match with direct cost. I'm sure we still remember the reason why we wrote it like that, right? So that by the time the error check throw up, right? Error checks throw up, we definitely know it's just telling us where that error is coming from. So I'm going to link that here to copy. Let me hope they are both in the same. Okay, yeah, same. So put that here, column G. Okay, column F. Yeah. So we are sure what is going on. Also, there's also something we call no, it's just only supposed to be 1, not 2. Check. So you are still, yeah, so it's only 1. Also, there's something we also call version control, because when you are building this type of model, right, so you are building, let's say you are sharing with the client, you are giving them updates as to where you are and how. So most times it's always very, very good you do things like this. So we're supposed to also create for EBITDA, but I think we can reserve that one for net profit. So let's still that 2 checks, they are okay, at least for us. So the next one will create for the next profit to check their matching. So now, as I said, we've created this calculation output. We can decide to have the monthly output, but it will be as if we are also replicating the same thing that we have here. Now, as I said, most times it also depends. If the clients are interested in having only the monthly view, and you don't want them to go to the calculation, we can recreate that monthly financials here, right? There's also an option where we make it dynamic such that if they want to view a monthly data, they can view it monthly. If they want to view it on semi-annual, they can view it on semi-annual. If they want to view it on annual basis, they can view it on annual basis. But I'm not sure we are going to do that in our session this time. I'm sure you can always explore that on your own. So what I'm going to do is I'm going to call this our financial statements. Okay, you know what? Let's create the monthly, and then we can also recreate the annual. So just be linking. So it's as good as if you are duplicating that same financials. Well, yeah, it depends. It depends. So everything will be a call up from. So which means this balance check, I'm going to call this a calculation balance check. Yes. So I hope that have we linked that to our checks? Okay, yeah. So we've linked it here. Okay. Oh, very good. Okay. So then we're going to call this monthly FS balance check. Then I can link that straight to our checks in the admin. Link that. So I'm just pasting as a link. Okay. So to be sure, okay, yes. So that's always good. So just link everything since we've done all the calculation. We've done all the link in our calculations, and if there's any error, we're sure and we know where we need to look at the error. Okay, so now just to create my annual. So let me just duplicate this guy and I'm going to call this so O, then I'll make this annual financial statement. So let me see, did we create that? And okay, yeah. So I think we decided to go with this structure where we are not having the annual by the side. Okay, so here, how many years let me see, did we create a yearly annual timeline? Okay, yes, perfect. So we've created annual timeline. So we can even change the cell color to something like green. My calculations, just make it light orange color like this. Okay, yeah. So this is the annual, and let me see how many years. So 7. Okay, that's 9. I only need 1, 2, 3, 4, 5. Okay, so anything from 10, just delete, clear the whole range. So it's always good. Then I can close my workbook from that end. So we can focus on what's needed. So for my timing, just link that straight to my annual one that I've created. So this, the data in here. So period counter, there's no 12 months here. So let me link this to my period counter, all in my admin, right? Then annual counter. Then I can just make this one to show like year 1. No, that might not work. So let's come here and let's update this for the actual forecast. Okay, just try to see a better way we can present that. So now counter is still the same thing. Then for our timing, so let's see for our timing. I think when we created this, okay, so let's also recreate that timeline for our HANA. I just copy this. I said, just try to work smart, keep the same structure. Right, okay, yes. So we have this. I can link this here. So that it shows like this. So which means we only have one full actual. And to now do that, now we have like 2 different way of doing this, right? Some people believe use of some ifs is way too much. Like the formula can be way too long. So what they usually do is they create like a unique ID for each of the period and match that. But for our own, I think we are still going to use the sum if. So sum ifs, right? Come to my monthly, highlight all my revenue. I'm going to keep the the column constant because I'm going to reuse it, comma. Then my first criteria is, and the reason why I kind of like this, yeah, is that you can also use like a unit code, then you do your simple sum if, but still give us the same thing. So my period, my start date, which I'm going to lock, comma, then I'm going to say, are you greater than or equal to? So are you greater than or equal to? So most time we need to put that in quotes. Are you greater than or equal to? Close the quote, then put and function. Come to my annual, then select the start date, which I'm going to keep the row constant. Can now delete the whole annual because it's still in the same cell. Then comma, I'm going to work smart, but let me just highlight it. So highlight the end here, right? Comma, copy that same if it's greater than, but this time it will now be if it's lesser than, and that will be K column 2. Close the bracket and press enter. You can drag that across for the year. So the reason why some people we always say, okay, let's create a unique ID is because of it can be really hard to even understand what is like all these sum use and the way it appears. So which I kind of agree, but yeah, let's just keep to what we are using now. So to check my historical, was the last 12, the first 12 months. What do you have? 81. Is that the same thing? Okay, all right. So you can always also create like a check to be sure those figures are aligned. So for the income statement, we're going to have it like this. Then I can copy the same formula for my cash flow. I can use that for our balance sheet. Balance sheet is going to use, we're going to use a different formula. Okay. All right. So remember, so we need the last actual, which we expect this last two to be actual. Then we're going to have our next 5 years, which is 1, 2, 3, 4, 5. So remember, we expect this last two period to become actual. So I said we expect our transaction to be in January, so we must have our financial up to December of this period. So we expect these two guys to be actual. Then we need the next 5 years. So 1, 2, 3, 4, 5. So which means these two guys, we actually don't need them. But for the purpose of updates, right? I said actual then becomes 3 years, and actual becomes 4 years. So it's easy for them to always keep that the monthly, since we have the monthly to have even considered two additional periods which we do not need. It's always good we have that ready. You get okay? All right. In fact, this period counter. Come in, let me find a way to make the historicals to appear in negative and the forecast to appear in positive. So that's something we can also do. So let me see. So equal to let me see. Let me see how we can automate that. Do we need to do that? Yeah, so basically what I want us to have is, so this becomes like this becomes 0, then this becomes 1, 2, 3, 4, 5, 6, like that. So we could also decide to make it an input, but we can always find a way to automate this. Well, sorry guys, my my so timeline counter. My brain is not booting now. So we can decide to have it like this. So which means by the time this becomes actual, then this becomes so this becomes -1, and then this becomes 0, and things like that. So just link that so that anything, all this negative 0 will, then this will give us this +1. So basically we are saying, okay, yes, this is forecast year 1, year 2, year 3, right? But no. So this supposed to come to our period counter, and I'm not sure we will need this annual counter again. Yeah, so that it's not confusing people looking at it. So it's easy to say, yeah, forecast year 1, year 2, year 3, year 4, year 5, year 6. So by the time we have the data fully for year 2, then year becomes the actual forecast year 1, year 2, up to year 5, like that. So for the balance sheet, for the balance sheet, uh, we can just use equal to sum if. So instead of sum if this period, sum if I light my entire line, I'm going to log the column, comma, then my period end date. Remember, balance sheet is at always end period, which I'm going to keep that, comma, then equal to, so with my double quotes, equal to, and my end date in here. My end dates, enter. Why am I getting this? So sum if. Okay, so okay, let me just use the sum ifs. So sum ifs. So sum ifs. and summing the line item, then the dates equal to the same end dates that we have here. So currently, this is what we're going to get. The balance sheets also balanced. Then I'm calling this one annual balance sheets. Go back to my checks and link this to my checks. No, so no, I think we need to make one. We need to make an update. So basically, these monthly financial statements are not checks. They are not alerts, they are checks. Remember I said checks are things related to financial statements being balanced or not being balanced. Why checks are, yeah, things they might be. It does not mean our model is not balanced. It's just calling maybe reconciliation differences and things like that. So 4, 5. So remember that. So that won't come under this guy. This will come under. This one should come under our normal checks. Okay. So just to check my balance sheet, my cash flow as at end of. Let's see what is going on here. Okay, so we are yet to link that, so that might not give us what we want. But at the end of December year, cash balance is 106. If I come to my annual statement, look at my ending cash, same thing as 106. So that's kind of give us a quick check to be sure of what we've done and if this is making sense. Okay, so any other analysis we want to do, we always include them. If you want to do it on a monthly basis or annual basis. So do we have any question? Do we have any question? Do we have any question? So it seems the business is really they're really not making profit historically, right? So in fact, let's be sure that I'm going to reformat this historical data so that those negative also appear as negative. I think we created one. Let's see this one. So add one decimal to it. Then we have it like this. Okay, yeah. So okay. So it's also easy for us to see here. All right. So I think we'll call it a session here today. We've completed our revenue, direct costs, personnel expenses, selling, general and admin. So we need to go to depreciation, but we cannot do depreciation if we don't do our balance sheet. Now, because we've done our revenue and we've done our costs, right, we can be able to do our trade receivables and prepayments. I can also do our trade payables since we have that. So which means in our next session, we're going straight into our balance sheet and we're going to work on our net working capital line item, which is always very, very crucial to the cash flow. As I said, we're still going to have a recreated cash flow. In fact, let's do that cash flow today before we call it a session. So I'll come in here and I'll put this here, and I'm going to call it something like a waterfall cash flow. Okay, so which will form a basis as to key line item that we need. So here, the first thing we need is we need revenue, then we need our direct cost, then we have our operating costs. Right? So this structure kind of gives us the real core line item needed for insights, for the main key insights needed. So total revenue, I bring that here, my direct cost. So link that, my operating cost. So which I'm going to sum these two guys, personnel and selling general admin expenses. Then straight I have my EBITDA. Right? So this structure is basically what we are going to be using. If it is, because most time we could also build this for credits, lending agents. Maybe the model is for credit rating, right? They always have their own structure in which they want you to present the financials. Okay, so this EBITDA, right? So what's the next thing? Then we have our changes in net working capital, so which I'm going to bring down here. So link that, we have that in our cash flow already. Then we also need our so we need our tax. So less our tax. So tax expense should be tax paid. So let's call this tax paid. Tax expense paid. Okay. Then we have our cash flow from operations. Cash flow from operations, right? So which I'm going to sum up my EBITDA plus my changes in working capital and my tax paid. Then I have my capital expenditure, which I can list to my cash from investing, right? And that will give us our free cash flow to the firm. So most times, as I said, we build this for different purposes, right? Credit rating could be to raise funding. Then we're now going to have which is still, so maybe I'm going to call this any line item adjustment, right? Then we're going to have our cash flow available for debt service. So most times you want to get funding, short-term funding, right? They also look out for those key metrics. Can give us our cash flow available for debt service. Then if there's like an equity drawdown, um, equity drawdown, then we can also have debt drawdown. Then any other financing funding will come in here. Sorry guys, since my hand is moving way too fast than my mouth, right? So we got to sum this. Then this will be cash. So cash available for debt service. Yeah, so then this will be before funding drawdown. Before funding drawdown. So this will be cash flow available for debt service. Now this will be after funding drawdown. Right, so most time because the way it appears, I might just wrap that entire cell, then put it in the center. Okay, so which means this cash available after this will be the main cash available for debt service. So no need for us to put the after drawdown. The first one should be before drawdown, right? Then this is cash available for debt service. Then any debt service element that we now have, this one we now need to start coming in here. Okay, so we have some other. Okay, yeah, so that's good. So firstly, we need our debt principal repayment. Okay, debt principal repayment. So debt net. Okay, yeah. So most times, this also depends, right? And the question is, are we adding interest income as part of it, or we are not adding net interest income? But let's state, so this is debt interest expense. Then this is interest income. So some people decide to add it up to just net each other off. Okay. Then we have cash available for. So if there's, most times there are some fees that we still need to model, so we include that. So call this funding fees. So that will be some. So just sum everything across, right? And then this become cash available for equity. For equity, basically, cash available. So I think there's also free cash flow to the equity, but cash available for equity. Let's call equity distribution. Cash available for equity distribution. So what's happening here? Are you wrapping? Cash available for equity distribution, right? Then we now have a dividend paid. Then we can have the net cash flow. So this is, then we can have the net cash flow. So this is what the structure will look like, right? And this is mostly what they want to see from what is happening within the business. So below we can have our opening cash, right? Then cash, you have your net cash flow. Then we have our closing cash balance. Okay. So I want to be able to see the cash generated in each period. So the balance, closing balance for previous period. Then the cash flow comes in here, and this gives us our cash ending balance. Okay. So this is typically the structure, and I can just copy everything down like this. Go to my handler below here. Just copy it from here. Right, that's B67. So I'm sure they fall in the same. Okay, yes. Then you just copy my formula here so that we have it being summed across. Copy the formula across. So by the time we have those data, it will automatically feed in here. We can see some other things that we need. So the key metrics that we know, there might be, I said, depends on based on the objective, right? If it's for debts and not this debt rating, we need to be able to model out their debt coverage ratios, what that looks like, some other key interest coverage ratio, right? Loan life coverage ratios, minimum DSCR, medium, and some other key metrics needed for that, for the decision making. So yes, for now, let's call it a session here today, and we pick things up from here in our next session. And as I said, we focus on our net working capital in our next session, and if time permits us, we also touch base on our property, plants, and equipment, which will give us our depreciation and amortization data. Right? So I hope it's been a very interesting and fun session we've had today, and I'm sure it's really getting interesting. Right? Most times learning curves are always not that that easy and that smooth, right? Some of us had to go through the practical experience before we could be able to put together the puzzle. So yep. Thank you everyone for today. So if you have any question, any contribution, anything you want to ask, I'll just give us the next 5 minutes to be able to discuss that. I've also granted us permission to unmute our mic, and if you prefer to type in the chat box, you can also go ahead with that. Yeah, so it's getting really intense, but we've really not. Yeah, so I'll share the recording after the session. So please remember, as much as it looks as if you understand while I'm doing my nonsense, it's always good you sit down yourself and be able to understand, build it on your own. That's the best way you can learn and get better at it. So as I said, you see now the simple structure setup that we've created while we are setting up our model templates has really helped us. So least of our worry is our model not balancing. In fact, that will always be your least worry when you are getting your model together, because there are always so many uh things that we need to incorporate into the model, right? Management, we say, oh, we know what we need to do this, we need to. So you then have to focus on that mechanical aspect of it, right? To be able to put that flexibility together. They can tell you that, oh, you know what, for dividends paid, dividend will be restricted uh, to if profit, if you are generating profit, or if retained earnings is negative, or if cash is. So there are always different terms, different things. Because, oh, we have this debt that we need to refinance, and you need to build that into the model. So you have a lot to do. So once you've done the setup and you are quite sure of the setup is working, then you can now concentrate on the calculation and how to interpret most of those covenants that they have, or things they expect to incorporate into that figures, into that financial as far. Oh, maybe they want to raise bond, and how will they pay back? We need to do like a refinance. Oh, we need a shareholders loan, and these are the terms that we are incorporating, and we definitely want to put this into the forecast. So those are things that should now take your time, not that you now be struggling to be finding, oh, why is balance sheet not balanced. That should be the least the least thing that you even want to face when you are building the model. Yeah, a colleague of mine spent almost 6 hours just trying to find why the balance sheet is not balanced, and it was just coming from the historical. So most times you check the historical to be sure that yes, historical is actually balanced. I'm not sure we did that while we are building our model, but I'm sure. But when we did this call up, by the time we are done with our call up, so we'll see. But most times, always the first thing that you need to do so that you can save yourself some headache. So, right, thank you everyone, and I hope you have a great evening ahead. And we'll see you in our next session. So immediately the recording is available, I will share that with everyone of you. All right.
Thank you. Thank you.
All right. All right. Thank you, sir. Thank you. And please enjoy the rest of the weekend.